15 in New York. We're going to be looking at what opportunities we have here going into our afternoon and then into the rest of this week. First thing we'd like to do, though, before we get into our markets is talk a little bit about SpaceX. And what's really amazing about this, what you're looking at here is SpaceX essentially returning to its $150 price, which is where it was opening up inside of where it IPO'd. So in 5 trading days last week, retail investors poured $405 million into SpaceX. That was more than the entire Mag 7 combined. So it was more than a full week of SPY and Q's retail buying. It was the single strongest retail debut in IPO history. And then yesterday, $600 billion in market value was gone. SpaceX IPO'd on June 12th back here at $150 a share. The offering price was $135. It opened above that at $150. And then retail came in immediately. So $405 million in 5 trading days, not from institutions, from retail. Individual traders buying shares, buying calls, chasing this thing. Chasing it. 405 million beat the combined retail purchases of Apple, Nvidia, Microsoft, Meta, Amazon, Alphabet, and Tesla that same week. And again, like we mentioned, it beat the first full week of SPY and Q's retail inflows. So the stock ran from 150 to 229, as you can see here on the screen. And on the peak of the 16th, it was actually the 15th here, SpaceX briefly surpassed Microsoft's market cap. Let me repeat that. SpaceX briefly surpassed Microsoft's market cap. And then day 5. The flows went virtually non-existent, not down, not reduced, gone. Down 16.4% in a single session. $600 billion in market value was erased. A record single-day dollar destruction. Absolutely amazing. So what does it tell you? The retail coordination was real. It was almost like they were trying to AMC it or GameStop it, right? There was a gamma squeeze that was going on. If you were around in 2021, you know about this playbook. You know the playbook. The principle is pretty straightforward. Retail buys call options. Dealers who sell those calls have to hedge their exposure. They hedge by buying the underlying stock. That pushes the price up. Higher prices push those calls deeper in the money. Dealers need to buy more stock to hedge, so they have to buy more. And the feedback loop builds on itself until the squeeze breaks loose. So retail looked at SpaceX, high profile name, massive public interest, low float, and they saw what they perceived as being a GameStop setup. But that is wrong, and I'll explain why it's wrong. The gamma squeeze on SpaceX reversed faster than it was built. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.